Most traders are staring at NVIDIA and thinking the dip is a gift. They're wrong. Right now, the weekly chart is screaming sell, the daily is strong sell, and yet the monthly trend is still a strong buy. That gap, that divergence, is the trap. There is one danger zone and one hidden opportunity right now. I'll show you both. The danger zone is the $195 pivot that is acting like a lid on any bounce. The hidden opportunity is the liquidity sweep that will come if we break below $190.65. A move that could cascade into the 200-day moving average at $188.09. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Write this number down. If we break and hold below $190.65 today, the entire structure resets. That is the line in the sand. The current session bias is fade the rally. We are trending lower on the 4-hour and daily, but the 1-hour chart has flatlined into neutral, which means the market is likely to engineer a brief pop to suck in late longs before the next leg down. The herd is still positioned for the AI melt-up, but the Form 4 filing for June 29th tells you that an NVIDIA insider just sold. When the company's own directors lighten up while retail is buying the dip, the trap is set. Invalidation level, a 4-hour close above $199.31. That's the R3 resistance, and I'll flip my bias to consolidation. Until then, every bounce is a short opportunity. Let's go to the charts. On the weekly time frame, price is buried below the MA20 at $204.89 and the MA50 at $204.97. That's a bearish structure, a lower high after a multi-month top. Weekly MACD is negative and widening, and the ADX at 43 tells you the trend is strong, not just noise. Drop down to the daily, and it gets worse. Price is $194.91, stuck below the MA5 at $197.16, the MA10 at $200.65, and the MA100 at $199.94. The only major moving average still below is the 200-day at $188.09. That's the gravitational pull. Daily RSI is 40, not yet oversold, which means there's plenty of room to fall before a mean reversion bounce shows up. Stochastic is 35, still sliding. CCI is minus 147, deep in the basement, confirming momentum is one way. The MACD histogram is minus 3.79 and accelerating. This is not a base. This is a trend with unfinished business. On the 4-hour, the story is identical, strong sell. Price has been rejecting the $194.98 R1 resistance cleanly. Yesterday's candle left a wick right at that level. Every rally attempt is getting sold. Pivot point is $193.98. And we are oscillating just above it, but the momentum is draining. Here's what most traders miss: the correlation with the S&P 500 gamma structure. When the SPX loses its put-heavy gamma support, NVIDIA acts as the AI gravity well. It accelerates the downside because it's the most crowded momentum trade on the planet. And right now, the VIX structure is starting to twitch. If the S&P cracks its critical 0 DTE floor today, NVIDIA will not just follow, it will lead. The exact support and resistance levels you need burned into your eyes. Immediate resistance is the pivot at $193.98, but the heavier wall is a 1 at $194.98. Above that, $197.43 and $199.31, where the 100-day MA sits. Support side, S1 is $190.65, the last line before the abyss. S2 is $188.77, which hugs the 200-day MA at $188.09. That cluster is the volume-weighted accumulation zone where institutions may defend. If that breaks, S3 at $186.32 is the next air pocket. Think of $190.65 as the trapdoor. When it goes, the swing short becomes the primary play. Now, what actually drove price here in the last 24 hours? The core news is the Form 4 insider transaction. It's not a massive sale, but it's a signal. selling when the stock is already down 15% from its highs and the AI narrative is being questioned. Analyst sentiment is shifting. Markets broaden as AI costs rise and inflationary pressure linger. That's code for money rotating out of pure AI growth and into cyclicals and value. Yield spreads are widening, real rates are creeping higher, and that directly compresses the valuation multiple on a stock like NVIDIA. My 1 to 2 week directional lean is that we chop lower into the $188 to $186 demand zone, possibly bounce hard from there, but any rally will fail below $200. The event that invalidates this entire bearish thesis is a daily close above $199.31 with volume. If that happens, the buyers are back in charge. If not, the grind continues. Do you think the dollar breaks 105 this week? Comment yes or no. I'm tracking consensus. Because a dollar breakout adds another layer of pressure on risk assets, and NVIDIA will feel it first. Most people skip this section. That's exactly where the money is made. Keep watching. Strategy 1, the opening scalp. A high probability short right at the resistance that no retail trader is looking at. Right now, the 5-minute chart is coiling below the pivot, but we can anticipate a pop-up to $194.90, just below a 1, during the first hour of the cash session. The trigger, price taps $194.90 and prints a bearish engulfing candle on the 5-minute, ideally with an RSI rejection at 60. That's your entry. The stop loss goes at $195.50. That's just above the R1 level and above any wick noise. Your first take profit is $193.50, right at the pivot area, a clean 1.4 points. Take profit 2 is $192, the next intraday liquidity pool, giving you a risk-reward well over 1:2.5 R. If the 5-minute candle closes above $195, the scalp is void, walk away. This is a fast snipe, not a hold. The opening scalp, cut entry, 194.90, 5M bearish engulfing after tap, stop loss, 195.50 take profit 1, 193.50 take profit 2, 192.00 risk, reward, 1:2.5 R invalidation, 5M candle closes above 195.00 strategy 2, the liquidity grab. This is the counternoise scalp that profits from the stop hunt. The market knows retail stops are sitting just below $190.65. I expect a fake breakdown, a sweep down to $190.30 or even $190.10, and then a snapback. Here's how you play it. Wait for a 5-minute candle to wick below $190.65 and then close back above it. The entry is on the next 5-minute candle open, provided the price is above $190.65 and the RSI is curling from oversold. Your stop loss is tight, $189.90, just below the sweep wick. The target is the nearest intraday liquidity pool, which is $191.50. That's the first resistance where trap shorts will cover. This is a 1:4 risk-reward scalp. But I'll be blunt, requires fast fingers. If the price closes a 5-minute candle below $190.65 again, you're out. This is a counter-trend play, so size it small and take the profit quickly. The liquidity grab, ONG entry, 190.30, sweep and snap back above 190.65 on 5M, stop loss, 189.90 take profit 1, 191.50 risk, reward, 1:4 R invalidation, 5M close below 190.65. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing. This is the trendline trade that rides the daily momentum into the 200-day magnet. We are not chasing breakdowns here. We wait for the bounce that traps the dip buyers. My trigger, a 4-hour retest of the $195.50 zone. That's where the MA5 and the psychological gravity of the pivot confluence. If price rallies into $195.50 and prints a bearish engulfing or a long wicked rejection on the 4-hour, that's the entry. The stop loss goes at $197.50, above the R2 resistance and above the MA10, giving the trade room to breathe without being whipsawed by noise. Target 1 is $190.65. The S1 support, for a 4.85-point move, that's a 2.4R return. Target 2 is $188.77, right at the 200-day MA cluster. Once price reaches halfway to target 1, at $193, I'll trail the stop to break even. Then let the trade run. If the daily chart closes back above $197.50, the swing is invalidated. The bears have lost control and we step aside. This is the high conviction trade for the next 48 hours. The session swing, at entry, 195.50, for H bearish engulfing rejection, stop loss, 197.50 take profit 1, 190.65 take profit 2, 188.77 risk, reward, 1:2.4R invalidation, daily close above 197.50 risk management pulse. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. I cap at 0.5% per scalp. No positions through high-impact macro news, and stops are non-negotiable. This is how you survive to trade the next big move. Tomorrow, NVIDIA could gap through these levels, and you want to be around to capitalize. Let's close the loop. The single most critical level for tomorrow's session is $190.65. If this level breaks on a daily close, the whole monthly strong buy trend is in jeopardy, and we are looking at a free fall into $188.77 and then $186.32. That is the cliff. I'll have the updated blueprint 24 hours from now, before the next open, with the exact levels that define whether this is a correction or the start of a new AI bear market. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. That's where the liquidity tide is turning, and it directly feeds into NVIDIA's next move. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter, straight from the institutional desk. End with silent on-screen text. Scalp the noise. Swing the trend.